Good morning and welcome to the Stock Sense Morning Brief. I'm Malik and it's Friday, December 19th, 2025. Yesterday, the Pakistan Stock Exchange delivered a powerful session with the KSE-100 index surging by over 1,600 points. The benchmark KSE-100 index climbed by nearly 1,650 points, or just under 1%, to close at about 172,000 points. This strong performance followed its previous close of just over 170,300 points. Market activity was robust, with trading volumes on the main board reaching approximately 950 million shares, valued at over 54 billion rupees. However, despite the significant index gain, market breadth was slightly mixed, with 217 advancers, 228 decliners, and 37 stocks remaining unchanged. This suggests that while the overall index saw a substantial rise, the gains were somewhat concentrated rather than being a broad-based rally. Turning to sector performance, commercial banks played a notable role in driving the market upwards, adding over 400 points to the index. The fertilizer sector also contributed positively, gaining more than 700 points. On the other hand, automobile assemblers acted as a drag, pulling the market down by over 5,500 points. This highlights specific areas of strength and weakness that influenced yesterday's overall performance. From a technical perspective, the market continues to exhibit a generally bullish undertone. All key moving averages, from the short-term 10-day to the longer-term 200-day exponential and simple averages, are signaling a buy action, reinforcing a strong upward trend. While detailed data for oscillators isn't available at the moment, looking at pivot points, the KSE-100 closed comfortably above its classic R1 resistance level of around 170,000 points. This level could now transition into immediate support, with the next significant resistance lying near 173,400 points. On the corporate front, we have a couple of board meetings scheduled. BF Biosciences Limited and TPL Insurance Limited both have board meetings to consider matters other than financial results. We have no dividend announcements or last-day entitlement notices from the provided data for yesterday. In economic and market news, there was a flurry of important developments. On the positive side, Pakistan is actively seeking a substantial loan from the Asian Development Bank to address its persistent circular debt in the power sector, a move that could lead to more affordable tariffs. Auto financing continued its growth for the 12th consecutive month, driven by reduced interest rates, signaling a recovery in the automotive industry. In a significant relief for supply chains, transporters ended their 10-day strike, which had disrupted industrial operations and trade nationwide. The country's central bank reserves hit a nearly 4-year high following an IMF inflow, bolstering external account stability. We also saw major corporate activity with Maple Leaf Cement moving to acquire a majority stake in Pioneer Cement, indicating consolidation in the sector. Furthermore, the IFC and Fatima Fertilizer announced a $60 million renewable liquidity facility to support Pakistan's agriculture sector, and Systems Limited showed a positive performance and outlook. Additionally, the Sindh government and the World Bank are strengthening their partnership, with the World Bank funding 13 projects in the province with a total commitment of about $3.8 billion, which could provide opportunities for various sectors. However, some economic indicators presented a mixed picture, with the current account posting a modest $100 million surplus in November, a significant drop from the previous year, and the cumulative current account deficit for the first 5 months of the fiscal year reaching over $800 million. Net foreign direct investment also saw a 23% year-on-year plunge to $180 million in November. A notable concern also emerged from Karachi, where builders have alleged intimidation by foreign gangs amid a surge in extortion cases, threatening a business shutdown if the law and order situation doesn't improve. This is a critical issue for the real estate and construction sectors in the economic hub. Moving on to institutional flows, yesterday saw a clear dynamic. Foreign institutions were net sellers, offloading shares worth nearly $5.9 million. This foreign selling was comfortably absorbed by local institutions, who are net buyers by a similar amount. Breaking it down further, mutual funds were the strongest local buyers, with net purchases of about $4.7 million, followed by individual investors who bought around $3.2 million net. Banks and DFIs also showed net buying interest of about $1.6 million. On the selling side, foreign corporates were the most significant sellers, with net outflows of roughly $5.9 million, while broker proprietary trading registered net selling of about $2.5 million, and insurance companies also sold around $1.3 million net. This indicates a strong local absorption capacity countering foreign divestment. My take is that yesterday's market surge, while impressive, was largely a testament to strong local institutional and individual investor confidence, which effectively countered foreign selling. The positive macro news, especially the end of the transporter strike and the boost in central bank reserves, certainly provided a tailwind for sentiment. However, the slightly mixed market breadth, along with the concerning law and order issues impacting Karachi's real estate sector and the mixed signals from current account and FDI data, suggest that investors are still navigating a complex landscape. It remains crucial to observe how these fundamental economic improvements translate into broader market participation and how the government addresses the challenges faced by the business community. That wraps up our Stock Sense Morning Brief for today. Thank you for tuning in. Remember, the information provided here is for educational purposes only and should not be considered investment advice. Always consult with a qualified financial advisor before making any investment decisions. Have a profitable day, and we'll be back tomorrow with another update.